Hello, everyone. My name is Monica, and thank you for taking your time to join us today for this really exciting webinar and tutorial. So today we're introducing to you our latest tool, which is called the Signal Center. I'm sure all the traders who have tuned in, they know the challenge of trading. When do you get in? When do you get out, right? In FX Pesa, we are not only just here to provide you with a platform, but we are here also to support you day in, day out while you're doing your trading positions. And this is exactly the reason why we have, as of recently, partnered with Acuity to deliver to you the new trading tool called Signal Center. We have also today with us Joe Neighbour, who's going to go through with you in depth the new trading tool. And before we get to the juicy part of the webinar, I definitely want to inform you that the recording of this session will be also available in our YouTube page. So I'm just going to share on your screen all our social media links. Make sure that you subscribe to our YouTube channel so you don't miss any relevant information. And definitely advise you to follow us across different social media platforms. In case you're interested in financial literacy, investing at large, or also in FX trading, definitely follow me in as well. I quite often push some interesting information there. Now, before we get started, just FYI, your microphones are muted during the course of the webinar. However, there's a Q&A box. And definitely make use of the Q&A box. We will make sure that at the end of the session, we will leave about 10 to 15 minutes to go over the most relevant questions. So I think without further ado, Joe, welcome.
Thank you, Monica, for the lovely introduction, and welcome to everybody that's joining today. I'm Joe Neighbour, as Monica introduced, and I will be going through a short webinar today on how to make the most of the signals that we provide, how to interpret them, and also go through some other bits and pieces which you may find interesting as well. So do feel free to use that Q&A box if there is anything that I go through that doesn't quite make sense or you want some more clarification on. So I'll just share my screen and then we can get the presentation on the way. Monica, would you be able to allow me to screen share?
Yeah. Okay. You should be all good now, Joe.
Thank you very much. Okay, so hopefully you can see the slide that I have up on the screen now. Actually, that's starting at the end, so let me start that again. Let me apologize. 1 second. There we go. Oh, I'm at the end again. Sorry about this, guys. Not very smooth, is it? Here we go. Okay, finally, we're here on the slides. So let's get on to the agenda. So I'm going to give you the introduction to Signal Center, who we are, what we represent, what we do, talk about how to successfully interpret the signals, talk about managing expectations when it comes to trading, and talking about some of the challenges that we all face when it comes to playing around with financial markets, and also talk about some tips and tools on how to improve your risk management, which hopefully you'll find of interest. So firstly, Signal Center, we've been around since 2009. We started out providing institutional research to hedge funds and investment managers, talking about market trends, market analysis, and providing them with the edge to try and better their trading. We provide very clear and concise strategies, and our ideas are they're able to be used by anybody from beginner traders to expert traders. And we partner now with a number of clients around the world to help them and help their clients be more successful when it comes to financial markets. So our design, the design of our research is that it can support anybody, as I say, from that beginner trader all the way through to an expert trader, and we have everybody in between. So we want to make sure that when we provide this analysis for you on a daily basis, that we're there to support you throughout that trading process and keep you up to date with all the latest information and movements in markets. So we're going to talk about how to successfully interpret these signals. Now, each of you who are clients of Equity will have the ability to download this tool into your MT4 and MT5 trading accounts. So we'll quickly go through how you do that and how quickly you can get that up and running, and also talk about then once you see the tool, how to make the most of it and how to successfully interpret all the information that we're providing to you on those signals. So let me just bring up the MT5 platform, which hopefully you can see. So where you'll find the signal tool is in the Expert Advisors tab here on the left-hand side. Once you've installed it, which is very simple to do, you just click on the link and it will ask you to run the installer. Once you then refresh the experts page here, you will then see the Signal Center trade ideas appear on the left-hand side. And it's simply a case of dragging that or double-clicking it on the chart, and then that will bring that up for you to access. So you will be asked to click a couple of boxes. You need to allow DLL imports, and you need to allow algo trading, and also ensure that that is clicked up here where it says algo trading. And once you do, you will be shown a disclaimer. Obviously, all important when it comes to financial markets. There are substantial risks involved, as I'm sure you all know. So just make yourself familiar with that before obviously accessing the signals. Once you've accepted that, this will take you through to the signal stream. Now here we have all the latest trade ideas that we've published over the last 24 hours. We publish around about 40 signals per day on the most popular assets. So we're talking indices, FX, commodities and cryptocurrencies, and we also cover a number of stocks as well. The coverage on the more popular assets like FX and commodities is intraday analysis. So all of the ideas are valid generally for a period of around 12 to 24 hours. But these short-term stock ideas tend to have a little bit longer duration, maybe up to a week. So on this screen here, we have all the tiles. So hopefully what you'll notice immediately is it's quite visually appealing. We've got some nice graphics on the screen, and it hopefully should be fairly intuitive as well. So obviously green represents buy opportunities and red represents sell opportunities. In terms of the terminology that we use, it's all very similar to what you'll see and be familiar with if you've been involved in using MetaTrader platforms previously. So the type of orders that you'll see will be buy limits, sell stops, and buy stops. Now, all of the ideas that we place are pending orders. So none of the signals that you see on the screen here are market orders. There's no rush for you to open up a trade idea and start panicking into that trade idea for fear of missing out on what the actual signal is telling you to do. So there's lots of time here for you to take stock of what the markets are doing on the day and really fine-tune your approach to the markets. So on the tiles here, we can just break down everything that we see. We have the name of the asset, which is obviously fairly self-explanatory. On the top right, we have the order type, in which in this instance for sterling Oz is a buy limit. We have a confidence score, which in this instance is 20%. We then have the key details that you need in order to replicate the trade. So we have the entry level, which today for sterling Oz is at 176.16, a stop loss at 173.82, and a target at 181.90. So there's various ways of being able to filter out these ideas. So if you want to try and focus on maybe the higher conviction opportunities or the ideas with higher confidence, then we have this scroller at the top, which you can scroll along and slide along to suit the confidence scores that you're most interested in. You can also break that down into specific asset classes. If you're only interested in FX, let's say, then it's quite easy to filter out all the other ideas that may not be relevant to you. We can also look by status as well, so we can see if ideas are expired, if they're live, and everything in between, all the pending orders that we have on the market. And finally, we have a language drop down. We have 17 different languages that we support, so if English isn't native or there's other languages that you'd prefer to see the signals in, then it's very simple to click that drop down and for you to access the signals in different languages. So let's go beyond the tiles now. So we have these tiles on the screen. Let's take US dollar, Canadian dollar, as our signal. We're going to click on that tile, and what we're going to get is a lot more information behind the scenes with this. So we can see here at the top, I'll just go through each element one by one. We've got the name of the asset, which we already know is $CAD. We've got the current price. We've got this radial gauge here, which says 100%. And what that represents, if you put the hover of the mouse over the information icon, this represents short-term news sentiment. Now, Signal Center is in partnership with a company called Acuity, and Acuity are alternative data provider, and they've got some really cool technology which will allow users to make the most of news basically without having to trawl through millions of articles to try and find information that's relevant. So what we have is a unique tool called natural language processing, which we read millions of articles using clever artificial intelligence, and from that we can actually associate a score with these currencies or commodities, whatever it is that we're looking at, based on the current news sentiment. So it's really, really interesting and really going to help you, we believe, get that extra edge when it comes to trading financial markets. So in this instance, we can see that for the US dollar versus the Canadian dollar, the news flow over the last 24 hours has been overwhelmingly bullish towards the US dollar. And that won't come as a surprise to anybody that's been monitoring the price action of the US dollar over the last few weeks and months. So as we know, this is a buy limit, and we're looking to enter the market at this specific price. So we are looking to get in to US dollar, Canadian dollar at 129.30. We have two targets to look for on the upside. In this instance, we're looking for 131.00 and 131.50. So actually pretty round numbers, psychologically important numbers that we're using to target on the upside. And then of course, when it comes to trading, risk management is all important. So we have the stop loss here, which is at 128.65. And then on the right-hand side, we have the confidence score. So rather than showing it as a percentage, it's more of a visual cue here. We can see that 4 out of the 5 bars have been populated to give us that 80% score. Now, our confidence scores are calculated using proprietary information and scoring methods. We use a number of methods using trend, primarily as the basis for the confidence score. So if we are buying US dollar, Canadian dollar, and the confidence score is high, that generally will mean that the underlying trend is very bullish at the moment. So we're going in line with the trend. Doesn't always mean that's the case. Sometimes our analysts will look to fade opportunities or try and scalp markets as well. We also take into account news sentiment. And if that's positive, that's going to improve the confidence score. And we also take into account the form of the analyst. So where Signal Center may differ from some of the other signal providers that you may be familiar with is that none of our signals are automated. They're all created and crafted by expert technical analysts. And we have a team of those that are situated around the world. So, you know, we are got a very experienced group of individuals that we work with. And those are the guys that are putting together these ideas on a daily basis. So moving on from the top bar here, where we've very much got all the call to action that that is relevant for us, we are then diving into the actual trade idea itself. Now we've got timestamps and all of these ideas, so we can see that the idea was published here on the 12th of May at 9:49 AM UTC, and we can see that the idea expires at 11 PM. Which is UTC plus 3 hours, sorry, for both of those. So we know that these ideas are going to have a finite life. So when you come to look at them, maybe tomorrow, we're going to have new analysis for you, and we're going to update our views based on how the markets have performed over the last 24 hours. Then we get on to the explanation of the trade idea itself. You may be fine with just receiving a call to action and being told or advised to buy or sell a particular market at a particular price, but in order to better your trading experience and to understand more about financial markets, it's really important that you educate yourself and do whatever you can to try and improve your edge when it comes to financial trading. So by understanding the terminology, understanding what it is that the analyst is saying here and what he's actually suggesting you do is going to improve your financial understanding dramatically. And also you'll then start to form your own views on markets as well. So you may be using our ideas purely just to trade on the basis that we'll hopefully produce you some good trades. but also you may be using it in conjunction with your own analysis and using it to validate your own thoughts on the market. So here we've explained that there's previous support at 129.50 and there's resistance at 130.50. So we expect there could be some levels of resistance above. So we're looking to, to take that into consideration. The jargon here isn't too dramatic, so there's nothing that's going to put you off or scare you. It's all fairly self-explanatory, and hopefully you will be able to replicate what you're seeing here onto the charts as well. We next have the volatility events. Now, trading is a tough game, and there are volatility events that are occurring throughout the trading session all the time, and it's really important that you're aware of those. Most of you will have access to an economic calendar or seen an economic calendar previously, and it's really important that you take note of the events that are occurring throughout the trading session, particularly if those events are associated to the markets that you're trading. So what we have here in the next volatility events is any high impact data point that is expected to impact this particular market. And these next volatility events will change dependent on the signals that you look at. So because this is relevant for anything linked to the US dollar, we've got initial jobless claims in here, and we've also got the Bank of Canada's Gravel speaking later today. So these are important events for this particular market. If we were to look at a sterling market, maybe against euro, for instance, and obviously we're going to have another lot of data sets that are going to be important to that particular market. So we don't want you scratching your heads during the trading session when you see a big spike in a chart and you don't know why. Make yourself aware of these events throughout the trading session so you're not caught off guard by potential moves in markets. Below that, we have supports and resistance. For those that are interested in your technical analysis, you will be very familiar, of course, with resistance and support and be using them, no doubt, in your own trading approach. These are our bespoke support and resistance levels that we have identified in the market and on the charts. And again, they can be used to validate or reject maybe your own ideas that you have. So you might be looking at dollar CAD and looking at the support level that's actually lower down than the area that we're suggesting getting involved at. So we've got support level here at 129.30, but we've actually got a support level in front of that as well at 129.50. So you might really like our idea, but you might think actually that 129.50 level looks a little bit more exciting to me. I've got the fact that it's trending higher. I can see that visually on the chart. I also know that the short-term news sentiment is positive towards this asset. So I'm actually going to get in front of this particular signal and trade it based on my own analysis. So there's lots of ways of interpreting these signals for your own benefit and not just copying them, which obviously you can do as well. But there's lots of other ways of interpreting the information. So on the left, we have the chart, fairly self-explanatory. I think each of these charts represents 4 hours worth of price action. So it's a 4-hour candle chart. And as we can see here, price is moving higher quite nicely, trending up. And if we hover over the key levels, we can see that it brings up a line on the chart. So this is where we've identified our entry level to be today at 129.30. We know that the price is already quite a bit higher than that. So we're going to have to see a reasonable pullback to that level in order to get involved in the market. Sometimes these trade ideas will not trigger. Sometimes we'll get a real flutter of ideas that all get triggered simultaneously. It just depends on the market conditions at that particular time. So take a look through what markets are interesting to you, because they won't always get triggered every single day. Finally, on this, before we move on to some other bits and pieces, we have this Trade Now button, which is just going to make the whole process really simple for anybody that wants to replicate these trades. Simply by clicking this Trade Now button, what will happen is a deal ticket will pop up on the screen, and it will populate the deal ticket with all the relevant information that you would need in order to copy this trade. So as we can see here, we've got the symbol, which is dollar CAD. We can see that the order type is a pending order because we're looking to buy the market on a dip. That's why we've got the order set here as a buy limit. The volume has been populated at 0.01. We don't know your personal circumstances, so we're not in a position to make any suggestions about how big or small you should be trading certain instruments. So we've just pre-populated this at the minimum deal ticket level. Of course, if you want to change this, you can feel absolutely free to do so. Then we have the price. So this replicates what it is that we're looking to do up here. We're looking to buy at 129.30. We've got the stop loss, which is taken from here, and the take profit as well. We've just got the first target in here. If you wanted to amend this to the second target, if you were feeling ultra bullish about dollar CAD and the setup that we've got here, then of course you can do that as well. And finally, these ideas will expire in line with when our ideas expire. So we don't want to be leaving you hanging with a pending order in the market when our idea is actually expired and we've rewritten a new idea. So this idea will drop off when the idea expires on our database. And then simply to replicate that trade, you would just click place order and it would populate into your order pad down here. And that's sitting there waiting to be executed. So hopefully really simple and very straightforward for you guys to use. So that sums up the signal stream tool. As Monica said, this video will be made available at a later date, so you'll be able to come back to this if you need anything at all. We've also got various user guides which break this down in text format and images, which of course will be made available to equity clients as well and FX Placer clients via the website. So now I can go back to the presentation and we can start talking about some other trading tips and tools which may be able to help you become a better trader. So I first want to talk about performance and how we actually measure performance. We don't count pips or ticks as may be often the method that people use. Instead, what we do is calculate our returns using the R method. So R effectively stands for risk, and that means the amount of money that we risk on any one trade. So effectively, the R element is the distance between the entry point of your trade and the stop loss order. So to try and break that down here, we have a chart on the screen of Euro Yen, and we've identified that we want to sell this particular market into this resistance level here, which is highlighted by the purple line. And we've got the visual on here of the risk reward, and you'll notice that we had the same visual on the charts of the tool. And it's something really important that we stress at every aspect of our trade ideas and every element of trading that we advise to clients and talk to clients about, is that risk reward is one of the most important elements of trading, and that is how much are you risking versus how much is your potential reward. And on every trade idea that we publish, we always have a risk reward ratio in excess of 2 to 1. So what that means, for every $1 that we risk on a trade idea, as a minimum, we're always looking to make $2 as the reward. In some instances, that's actually 3, 4, 5, 6 times the amount that we risk on a trade. And it's those trades, the ones that come up with the big returns, that are going to make the big difference to your trading over the long term. So how we would measure the performance here in this instance is if we were to get stopped out on this trade, then we would be negative 1R, minus 1R. If we were to hit the target on this trade, we've got a risk reward ratio of 2.57 on this. So we would be 2.57 R up on that trade. Now, R is a personal number to you. It's how much you decide you want to risk on a trade. If you want to risk $10 on a trade, that would be 1 R loss. If you want to risk $100 on a trade, that would be 1 R loss. But there are a few tactics here that I think you need to employ that are going to make this all a little bit easier for you and help keep you in the game as a trader for a long period of time. So this is just going to further break down the idea of position sizing and how you should maybe think about position sizing when it comes to trading, and talking about, again, this concept of R. So this is a NASDAQ example that we've got on the screen. And if we were to buy NASDAQ at a price of 7,350 with a stop loss at 7,350 and a target of 7,500, we can see there we've got a stop loss of 50 points on this particular setup. Now, if we were to risk £100 or $100 on this trade idea, then in order to calculate the trade size and how much exposure we should have, we would do the amount of monetary risk, which is £100, and we divide that by the amount of points that we're risking. This is how it works for indices. Obviously, it's different for FX and different for commodities because we're doing it in lot sizes, but there's lots of lot size calculators out there, which I'd advise that you try and source, because they're a really important source of information and helping you, become a better risk manager. So in this instance, we would be risking £2 per point. For every point movement in the NASDAQ, that would cost us 2 points. And we know that our risk is £100 and we're prepared to lose that. We've got that in our head that that is our maximum risk that we're prepared to lose on this particular trade if it doesn't go in our favor. So if the trade is to get stopped out, we will lose that £100 or we'll be down 1R. If the trade goes on to hit the target, we'll make 150 points, which is 3 times the amount that we've risked. So we will make £300 or 3R. And this is just an indicative performance chart of NASDAQ. I think it's from 2018, so apologies that it's old. I'll come on to some more relevant performance statistics in a bit. But over the period of 1 year on NASDAQ, we placed 80 trades. 44 of those were winners, 31 were losers, 5 of them were flat. And on average, that meant that we made 0.19R per trade, or in monetary terms, if we risked £100 on every single one of these trades, we would have made £19.80 on every trade. And if we times that by 80, we're going to have a pretty good year overall on this particular market. And we can see from the performance, we don't get it right every time. We are only humans at the end of the day, but by implementing these strategies for risk reward and risk management, we can see that the losses are fairly well contained and controlled. But when we get those big uplifts in performance, they tend to be quite outsized and more than make up for the fact that we've had some less than positive months. So hopefully that gives you a bit of an indication on certainly how we do things from our side of things. So then it comes on to the key question about how much you should risk when you trade. And again, I'll come back to the fact that, when we're producing this analysis, we don't know your personal circumstances. We don't know what your attitude is to risk. And therefore, we can't make any assumptions on how much you should trade. That's a question you need to ask yourself on how much you should be risking on each of these positions that you place. So in terms of answering that question, there's a few things that you need to ask. First of all, we want to make sure that the amount that we're risking makes the whole process worthwhile. At the end of the day, there's risk involved. And if we're going to take risks, we need to make sure that when we're rewarded, it makes a big difference to us, or it's important enough for us, for us to do it in the first place. But also we need to make sure that that risk number isn't too much that it's going to worry you. As we all know, trading is a super emotional game. And if you start to worry or feel anxious about the amount of money that you're risking on a particular trade, then you may be sitting there on your phones or on your desktops, constantly watching positions tick by tick, in the fear that you are onto a losing trade. So if you can clear your mind of those kind of thoughts and be comfortable with the amount of money that you've risked on individual trades and trust the process that you've got, then you're likely to have a much better time when it comes to trading. Other things to consider are things like win rate and being able to survive a losing streak or a drawdown in your finances. Now, if you've been trading for a significant period of time, you may have quite a data set of previous trades that you've done, and you can actually analyze your own win rates and understand any previous drawdowns or losing streaks that you've been on previously. So therefore, you can start tweaking your position sizes and the amount you risk based on that and take those things into account. If you know that you've been on a losing streak previously of 10 losing trades in a row, or if you've only got a win rate of 40%, you can tweak your approach and the amount that you risk on these trades to deal with those pullbacks or drawdowns in finances. So use all the data that you can to try and give yourself that extra edge. The other thing I'd say when it comes to position sizing and how much you risk on a particular trade is that it's really important, I think, to pick a particular method to do this. Now, personally, and what we do at Signal Center is we base performance on a fixed percentage amount of risk of our trading capital. So let's say, for instance, we have $1,000. we would risk 1% of our trading capital on a per trade basis. So every single trade idea, we're risking, well, on a $1,000 account, $10, let's say. So it's important, I think, not to let any of your convictions determine your trade size, because, you know, at the end of the day, we're only humans, and markets often trade in very random ways. So we don't know what's going to happen from day to day. We are making educated guesses based on our experience and our knowledge of trading, but we don't know ultimately what's going to happen. So don't ever believe that one trade is going to make you super rich. You know, just treat each one the same would be my advice, and trust your system and your approach. We did some surveys a little while back, just finding out how much people are risking on a per trade basis. And you can see the results of the poll here. It's not a huge sample size, just around 60 or so people. And as you can see, the smallest amount here is in the 0.5 to 1% range, because people typically want to chase big returns and typically want to you know, try and make big bucks very quickly. And that's why you find that the majority of the people are in this 2 to 5% range. And for me, that's where we start to get into some dangerous territory. Now, I'm just going to flip screens actually to a performance Excel sheet. Now, this is where we track all the performance of our trade ideas that we publish. We've got a comprehensive data set here, you know, a really rich record of information that we can refer to and use to our advantage to try and improve our trading ideas on a daily basis. Now, this started in 2018. Our records do go back further, but I wanted to start at 2018. And as you can see here, we've posted a significant amount of trades. 11,300 trades have been posted in this time. And in that time, we've actually had a win rate of 45.21%. Now, that may scare a few of you, but there is no reason for you to be scared, because it comes back down to our approach and how we approach markets on a risk management basis. Every single idea that we publish has a risk reward ratio of 2 to 1. Now, if you were to run some mathematical models based on a 2 to 1 strategy, so every time you win £2, every time you lose £1, you can maintain profitability with a win rate of around 33%. So it's not impossible to do. And we've got a win rate far in excess of that, over 45%, adopting that exact same approach. So as you can see on the chart here, the performance over time has been pretty good. And if we look down here, we've got two methods that we've used to calculate returns. We've got fixed R and we've got what we've called sized R. Now at the top here, we've got the initial capital that we started off with. So on a hypothetical basis, we started off with a capital amount of £1,000, and then we've tracked the performance using two different ways to position size our trades. The first one we've used is a percentage basis. So every trade idea that we've published, we've risked 1% of capital per trade. And we've also done the same amount, but on a fixed amount of capital. And in this instance, we've used £10 per trade. Now, the difference between the two of them is that with the percentage style of position sizing and risk management, you're actually going to benefit significantly from the impacts of compounding over the longer term. So you're not going to get that benefit if you just continue to risk the same amount on every single trade. So if your trade account value goes up, then your position sizes are also going to increase as well, obviously by doing it on the percentage basis. And you can see the difference here that it has on the performance over a long period of time. So the light blue line represents the fixed amount, and the darker blue line represents the percentage-based style, which is benefiting from compounding along the way. So we can see the difference between the returns is quite dramatic. The drawdowns are also quite different as well. So you have to ask yourself the question, are you happy with that level of drawdown in order to try and make that level of return? So we've got a lot more metrics here as well. We can break down into the seasonal effects of the analysis as well, what months we tend to do very well and which months we don't. We can also break it down on an asset by asset basis and even what day of the week. So Thursday typically is a very good day for our signals. Thursday being today, we hopefully have had a pretty good day. I need to double check on the analysis today with our analysts when I get a chance. But hopefully that highlights, you know, some really important points there for people to consider. And there is one more thing that we need to talk about here as well, and that is how much you're risking on a per trade basis. So we can change the outcome by changing this percentage figure. And I really want to drill down into, you know, why we use 1%. I think if we use 0.5%, that probably would be even more appealing for me as someone that doesn't really like taking too much risk. But at the same time, I understand that it might not keep you as excited as you need to be. But ultimately, making money is exciting. So if we can do that over the long term, you know, that's what we should really be focusing on. But if we change that to 0.5%, we can see here that the drawdown drops to a much more acceptable level. But of course, the performance has come down as well. But we can see there's a really nice curve in the equity graph there heading upwards, which is obviously what we want to see. Now, I believe we've established here a good style of trading and an effective style of trading that works over the longer term, using this amount of risk on a per trade basis of 0.5 to 1%. But where things really start to change is that if you start adding in more risk to these trade ideas, obviously the opportunity of making more money starts to increase, but you start to get bigger drawdowns if you start to increase the amount of money that you're risking on a per trade basis. So just by changing that from 1% to 2%, we can see that on the compounded version, the drawdown actually goes to nearly 91%. That's if you traded every single trade idea that we published, which is over 11,000. The chances are you're not going to trade every single idea. You're going to be focused on maybe a handful of assets that are most interesting to you. But by doing that, yes, we've made money over the long term, but can you suffer that amount of drawdown? Emotionally, are you going to be able to deal with your account going 90% down before it then starts to go up? So these are things you need to consider. We've got a perfectly good strategy here, an approach to the markets, but if we start risking too much, we run the risk of doing all sorts of emotional damage and causing possibly financial damage that we can't get out of. And if we start putting that up to sort of 5%, then we are talking about total catastrophe and an absolute blow up of your account, which of course we all want to avoid. So please bear this in mind. It is so important, you know, to take a considered approach to risk when trading financial markets. Now back to the slides. So just going to talk about some tips about how to grow a small account. Now, using that percentage approach for me is probably the best way of doing things, because of course you can benefit from compounding along the way. The size of your trade is going to adjust with the balance of your account. So that will be one way to grow your account more effectively over the longer term. The other, simple as it may sound, is to make a regular contribution to your account. That may mean a couple of nights less down the pub or a couple of less coffees per week. But if you can add 10, 20, 50, $100 into your trading account on a regular basis, it's going to keep your pot ticking higher. And if you're doing well with your trading as well, then it's going to help accelerate that growth. And the final thing is to think long term. It's so important to have a long-term outlook with trading, because if you're going to become a trader or want to become a trader, surely you're not thinking about what you're going to achieve in the next 3 months. You want to be thinking about what can I achieve in the next 10, 15, 20 years. You know, trading is not going anywhere. Obviously, there's lots of changes and new products that come onto the markets all the time, and circumstances and events are always changing, but the markets are always going to be here, and they're always going to be a source of potential profits for you. So if you can think longer term, dial back your risk to a more acceptable level, then you know the chances are that you will be certainly more successful over the longer term. And this is something I like bringing up as well at the end of these slides that I do. This is the final slide that I've got. And it's about this idea of thinking long term again. So this is a simple compound interest calculator, which you can find using the link below, sorry, the link I've got on the screen here. And what I've done here is started with a balance of $100 in my trading account, let's say. And if we can achieve 2% a month, which even that, don't get me wrong, is difficult to do, but maybe not unachievable if you've got you know, a good strategy, or you're using some of our signals to help you. And if we compound those returns on a monthly basis, and we do that over the next 20 years, and we also make some small monthly contributions to the trading account as well, then over 20 years, we could potentially turn that $100 account to be over $120,000 in that time period. Now, obviously, that's not necessarily going to be an amount that you'll be able to retire on, but if it's a supplementary income to your current income, then it's not too bad at all. And of course, if we start adding a few zeros on the initial starting balance and those monthly contributions, then you can imagine where this could potentially go. So super important to think long term, and hopefully what I've been through today will be beneficial to those that have watched it. Thank you very much for your time, everybody.
Thank you, Joe. Really, really appreciate it. I just want to emphasize from my side, it's all about compounding the age-world wonder and definitely thinking long-term. That's what we are lacking as FX traders quite often. There's a few questions, Joe, probably 3 or 4. I just want to share my screen quickly. There's been quite a few questions regarding where can I get the installer, etc. So I'm just going to show everyone on the Zoom call. So the installer is available for all FX Besa and EGM securities live trading clients. You can locate it in your client portal. So as you can see on the screen as well, if you log into your client portal, there is on the left-hand side, there's a tab called Analysis. There is some other widgets available for you, and the bottom one of them is called Signal Center. Once you click on the Signal Center, you have options to download both MT4 and MT5 installers. You can get the installers from here, and as Joe showed at the beginning of the session, you just need to install it to your platform, then either MT4 and MT5. And obviously in Kenya, we have a lot of traders who are mainly using their mobile devices. So obviously MT4 and MT5 mobile, they do not support the installation of any additional installers. However, we do have the live signals available also in the client portal. So if you do use your mobile as a primary device for your trading, you can log into your client portal. As long as you're a live trader with us under the Signal Center tab, you're able to see the signals from there as well. Now, Joe, there was a few questions. I'm sure that at the session you already answered some of them, but maybe it's worth to go over them one more time. One of the questions is how often are the signals generated, the new signals?
So every single trading day, we publish a new batch of signals. So the ideas are always up to date and fresh, and the ideas that you see on the signal stream will be in bold color. If you scroll below that, you will be able to see all the expired ideas that have been and gone. But in terms of new analysis, we are producing a lot around the European Open, so between sort of 5 to 7 a.m. UK time. We then publish a series of cryptocurrency signals and US indices signals around lunchtime UK. And then into the evening session for UK and the start of the Asia Pacific session, we then post more signals for that region as well. So there is a constant flow of signals throughout the trading day, and it's refreshed every single day as well. That's 5 days a week. We do have to have a break, unlike some of these cryptocurrency traders who are 24/7. So yeah, it's just 5 days a week.
Awesome. Maybe you can also reconfirm if majority of the signals are they for short-term or long-term trading, or what is the average duration once the entry price has been executed for the stop loss or take profit to hit, and or would the signal expire?
Sure. So the average duration of the trade obviously varies depending on market conditions. Typically, all the ideas that we publish on the main instruments like FX, crypto, commodities and indices are for intraday purposes. So we'd like ideally to get an exit on the same day, but of course that doesn't always happen. So they can run for 2, 3, 4, 5 days potentially. In terms of how we keep track of these trade ideas, we actually cut them off at the expiry time every day. So that means we don't actually hold any positions overnight on that basis, which is another effective way we found of managing risk, because we're not going to be caught out by any crazy moves that can potentially happen overnight. So the preferred method is actually to close the trades at the expiry time each day, regardless of the outcome. Hopefully in that period, we will actually get to see the trade hit the take profit.
Of course. I think the last question is how do you consider the signals that have a confidence level of less than 50 to 80%? Do you consider them bluntly just too more risky?
Do you know what? I actually don't. I mean, we set up the confidence score just to try and offer some way of filtering the ideas. Now, the higher the confidence score, typically is more of a tilt towards the actual trend of the instrument. So if the confidence score is really high, then it means that we're typically trading in line with the trend across the short, medium and long term. But as we know, not all trading opportunities are necessarily with the trend. We can see big breakdowns in prices in the opposite direction or by going against the trend. And that's where we can see some super big moves. And sometimes the confidence scores will show actually a bit lower on that. Because obviously we're trading against the trend, it can have a bit more of a riskier connotation attached to it, but obviously with more risk we can potentially get more rewards. So I wouldn't be put off by the lower confidence scores at all. And as I said, also markets can be very random, so just because we've applied a confidence score to them doesn't necessarily mean they're going to be a bad trade idea. I think you just need to set the risk parameters in your mind before going into any trade. So if you've got that fixed level of risk that you're prepared to lose, then you're prepared for all outcomes. So those lower confidence scores can potentially produce bigger returns.
Yeah, okay, that makes sense. I think these were the most relevant questions, Joe. Just to reiterate as well, as long as we have listeners who do not have a live account with FXBest or EGM yet, you can do so by going to our website, fxbest.com. You can apply for a live account there. As long as you become an active live trader, you are able to find the Signal Center, the installer, in your client portal, and you can start using it from there. Once again, we'll probably get the webinar live in our YouTube channel from tomorrow. You're able to go back and review the content as well. Joe, thank you so much for your time. Really loved it. And thank you everyone for joining us. Have a good evening.
It's been a pleasure. Thank you.
Bye.
Bye.